Welcome back to part 2 of weekly financial highlights for the week of July 4th, 2025. If you missed part 1, make sure to check it out for the first 5 major financial stories that rocked global markets this week. In this second part, we're diving into 5 more incredible developments that every investor needs to know about. From a dramatic cryptocurrency market recovery to one of the biggest corporate collapses of the year, plus major strategic shifts at tech giants. These stories will complete your understanding of this remarkable week in finance. Let's jump right into the action with our remaining top 5 financial stories. Story number 6, cryptocurrency market shows strong recovery momentum. The cryptocurrency market delivered impressive recovery performance this week, with total market capitalization increasing 0.2% and several major tokens showing significant gains. Bitcoin gained 2.5% in 24 hours, trading around $108,800 after touching $109,600. Ethereum demonstrated even stronger recovery momentum with a 6% increase, trading above $2,560. One of the week's most significant developments was the launch of the first Solana staking ETF in the United States, which generated $33 million in trading volume on its first day and attracted $12 million in inflows. Solana is currently trading at $150.84, with technical indicators suggesting potential for a breakout toward $160. Additionally, Nano Labs purchased $50 million worth of BNB tokens, bringing their total digital asset reserves to $160 million and demonstrating continued institutional interest in cryptocurrency investments. This recovery suggests growing confidence in the cryptocurrency sector and indicates that institutional adoption continues to expand despite previous market volatility. The launch of new crypto ETF products particularly signals mainstream financial acceptance of digital assets. Story number 7. Centene collapses following 2025 guidance withdrawal. One of the week's most dramatic corporate stories came from Centene, one of America's largest health insurance companies, which shocked markets by withdrawing its entire 2025 financial guidance and seeing its stock collapse 40% in a single trading session. The company reported that data from 22 of its 29 markets showed slower than expected growth in patient illness rates that were materially higher and inconsistent compared to previous assumptions. Centene projected a negative impact of approximately $1.8 billion, or $2.75 per adjusted share for 2025, compared to previous guidance of over $7.25. This dramatic revision sent shockwaves throughout the health insurance sector. The impact spread across the entire industry, with Molina Healthcare falling 22%, Elevance Health dropping 12%, and United Health declining 5.7%. This event highlights growing challenges within the U.S. health insurance industry and raises serious questions about the sustainability of current business models in the face of changing healthcare utilization patterns and rising costs. It's a stark reminder that even established industries can face sudden, severe disruptions. Story number 8. Apple recovers on AI collaboration rumors. Apple experienced a notable recovery this week, with 4 consecutive days of gains reaching its highest level in 6 weeks. The primary catalyst came from Bloomberg reports that Apple is in negotiations with OpenAI and Anthropic to utilize their AI models for the next generation of Siri, rather than developing the technology internally. Apple shares gained 2% to approximately $211.50. Though the stock remains down 17% year and is the only member of the Magnificent Seven with negative performance in Q2. Technical analysts suggest that Apple has broken out of a descending triangle pattern and closed above its 50-day moving average, potentially signaling a bullish trend reversal. This development indicates Apple's pragmatic approach to AI integration, potentially accelerating their artificial intelligence capabilities by partnering with established AI leaders rather than building everything from scratch. The market's positive response suggests investors view this collaborative approach as a faster path to competitive AI features, which could help Apple catch up in the AI race that has been dominated by companies like Microsoft, Google, and OpenAI. Story number 9. Robinhood soars on S&P 500 inclusion expectations. Robinhood markets reached an all-time high of $100 for the first time and closed up 6% at $98, driven by expectations that the company might be added to the S&P 500 index following Hewlett-Packard Enterprise's completion of its Juniper Networks acquisition. Robinhood has gained over 35% in the past month and an incredible 160% year, making it the strongest performing stock among potential S&P 500 additions. Additional growth factors include the launch of stock tokens and ETFs for select users. However, S&P 500 Dow Jones indices declined to comment on potential index changes, maintaining their typical discretion regarding inclusion decisions. This story demonstrates how index inclusion expectations can drive significant stock performance, as passive fund flows associated with major indices represent substantial capital movements. When a stock gets added to the S&P 500, billions of dollars in index funds must automatically purchase shares. The company's remarkable performance reflects both the retail trading boom and growing institutional recognition of Robinhood's dominant market position in commission-free trading. Story number 10, Intel considers major manufacturing strategy shift. Our final story focuses on Intel, which faces a critical strategic decision as new CEO Lip-Bu Tan considers shifting from the 1.8A manufacturing process to 1.4A. For their foundry business, this change could require writing off hundreds of millions or even billions of dollars invested in 1.8A technology. The potential shift to the 1.4 process aims to attract major customers like Nvidia and Apple. As Intel attempts to compete with Taiwan Semiconductor Manufacturing Co. in smartphone and AI chip manufacturing, Intel's board is expected to discuss the future of the 1.8A process in July and fall meetings. Intel shares declined over 3% on this news and have lost more than 25% of their value over the past 12 months. This decision represents a crucial inflection point for Intel's foundry ambitions and their ability to compete in the rapidly evolving semiconductor landscape. The company is essentially betting its manufacturing future on whether to continue with current technology or make a costly pivot to potentially more attractive processes. The stakes couldn't be higher. Intel's ability to regain competitiveness in chip manufacturing could determine whether they remain relevant in the AI and mobile computing era. What an absolutely extraordinary week for global financial markets. Combining both parts of our coverage, we've witnessed a remarkable range of developments that will likely shape market trends for months to come. Here's a quick recap of the main themes from all 10 stories. Economic strength. The U.S. continues to demonstrate remarkable resilience with outstanding employment data and strong banking sector performance, fundamentally changing Federal Reserve policy expectations. Strategic realignments. We're re-seeing major shifts across multiple sectors, from breakthrough trade agreements, reshaping global supply chains, to technology, companies restructuring for the AI era. Market divergence. Some sectors like banking and crypto showed strength, while others like health insurance faced severe challenges, reminding us that market performance is far from uniform. Technology transformation. The AI revolution continues to drive major corporate decisions, from Microsoft's workforce restructuring to Apple's partnership strategies and Intel's manufacturing pivots. Institutional evolution. Looking ahead, key factors to watch include Federal Reserve responses to strong economic data, implementation of new trade agreements, technology companies, AI transformations, and how the health insurance sector addresses its emerging challenges. The cryptocurrency market's recovery and continued institutional adoption suggest we're entering a new phase of mainstream digital asset acceptance, while individual company stories demonstrate how quickly market dynamics can shift in our rapidly evolving economy. That wraps up our comprehensive two-part coverage of this week's financial highlights. Which story surprised you the most? Which development do you think will have the longest lasting impact? Let me know in the comments below. Don't forget to watch part 1 if you haven't already. Subscribe for weekly financial market updates. Hit the notification bell to stay informed about breaking financial news. And I'll see you next week for another comprehensive market roundup. Until then, keep investing wisely, stay informed, and remember, in markets as in life, knowledge is your most valuable asset.